Your money is about to become worthless, and it's coming faster than anyone expected. 3 days ago, Trump signed a bill that just broke the back of the US economy. We officially can't afford the debt that we already have. The math is impossible now. And when that happens, they don't just print more money to pay the bills. They print so much money that your dollars become toilet paper. And when that happens, this is going to get crazy. It's already starting. Look around. Everything costs more and your paycheck buys less. Let's be honest. Your savings are shrinking. That's not inflation. That's your currency dying. And Trump just missed a major deadline that is going to make it even worse. It's not fine because we crossed a line that no country has literally ever come back from. And what happens next is going to wipe out everyone who isn't prepared. So tonight, I'm going to show you guys exactly what they're doing with your money and why Bitcoin might be the only thing that could save you from what's actually coming, because this isn't a recession. This isn't a market crash. This is the end of the dollar as you know it, and it starts right now. Be sure you guys are hitting that like button and subscribed here, but let's start with what happened 3 days ago that nobody is talking about. Literally, I haven't heard anybody else say anything about this, but by law, the president has to submit a budget by the first Monday in February. That's been a rule since literally 1921. Trump missed it. And this isn't a transition year where delays are normal. There's literally no excuse on this, right? Because here's the real kicker. While he's ignored the legal deadline to tell us how he's going to spend our money, he went ahead and signed the biggest spending bill in American history. And that's where it gets very interesting because look, Donald Trump, and I think he has the things in mind, but the one big beautiful bill, this adds $3.4 trillion to the debt in over 10 years. If made permanent, this adds $5.5 trillion of debt. That fiscal gap will be increased by literally 50%. So if you get this straight, right, he misses a deadline to tell us his spending plan. Then he signs a bill that is $3.4 trillion anyway. But this is when it gets scary because we just crossed a mathematical line that literally no country has ever come back from. And that's where we can see the debt start to spiral out of control. And look, this isn't just me and other talking heads talking about this. This is literally the Committee for a Responsible Federal Budget talking about this. January 22nd, 2026 is when this article was published. Now, this is where it gets crazy because this is like, something that, we almost never see countries come back from, and fiat currencies never survive. And this is where I think it's going to get a little bit crazy because Trump has made a lot of great moves, right? He's done a lot of cool things with, the tariffs, and he's come back and said things that have actually turned some heads. And one of the things he said recently actually kind of shocked me when he talked about the amount that he thinks the Dow Jones will go up. I mean, it's absolutely insane. He said this here, right? I predict 100,000 on the Dow by the end of his term. Remember, Trump was right. And this is because of the stock market, national security, tariffs, all the things that he's citing that he's done. But the reality is that the fiscal crisis situation could be coming faster than we think here because Budget and Accounting Act, it's 100 years old over that, right? So there's no excuse to miss this deadline. But the real kicker with it is that the interest payments have hit $1 trillion in 2025. It's more than defense spending. This is the first time that this has ever happened. And it's about as much as Medicare. And when these interest rates are more than the growth rate, that's when the debt starts to spiral out of control. And here's the math where they don't want you to understand. The interest rate you're paying on the debt is higher than your economic growth. Debt doesn't just grow linearly, it grows exponentially. And we just really hit that point. And Stanford is doing a big deep dive in this. And this was the publication back from July 2025. So we've known about this for quite some time. But there's some key quotes here. The one I think is updating Blanchard's work with more recent data that shows that R is now equal to G, which means the interest rate is now equal to the growth rate. So as soon as that interest rate gets a little bit higher than that growth rate, well, those deficits will start to spiral out of control. So right now, primary deficits are larger than they've ever been, and they're growing more negative. So the translation for that is for the first time in decades, we're paying more in interest than our economy can grow. Now, the Stanford's economist says that this is, quote, dangerous, and we may need to do a historical adjustment. That's academic speak for basically we're effed, folks. I mean, at the end of the day, this is what these guys are really talking about here is there's a lot of potential, let's say, issues that are going to cause this to come out of control because they talk about something called, this interest rate, right? And the Trump administration trade war is likely to lower at least near term growth rates of everything with this, tariff war that he's been under. The Republican budget bill is likely to raise the interest rates, though, and even more so to lastingly raise primary deficits. So Trump's policies are going to slow economic growth in the short term and increase our borrowing cost in the short term and increase our deficits. It's likely he's trying to trigger that debt spiral on purpose. Then look, I'm not saying that it is 100% certain of what is going to happen, but there's a lot of scariness when you look around because what does it look like in practice, right? We see the projections here from the American National Forum where they're examining this. And, this has been going on for a few years where people have been talking about some of the potential of this debt spiral. And essentially, there's, as Lynn Alden says, nothing that stops this train. So if we keep diving into how we see this essentially starting to play out, it gets a little bit scary, if you ask me, because the signs are already there. They're starting to show, right? And so the first sign, right, is that there's a lot of interest rate, I guess, let's say interest rate issues to say the very least. But before we dive into all the different signs, let's look at the projections because this is how it looks in practice. Debt is growing from 102% of GDP in 2026 to projected of 119% by 2035. That's a $52.1 trillion increase, or total amount, excuse me. By 2045, we're looking at 136% of GDP, $85.5 trillion. 2055, 156% of GDP, or $138.2 trillion worth of debt. So look at how this accelerates. We're not talking about linear growth. This is getting exponential. And that's when the debt spiral starts to get out of control, folks, because it's not just that, hey, the debt is perfectly fine, right? We've been seeing this problem start to triculate into the economy for a very long time. And that's where we have to keep a close eye on how this is going to play out because essentially the government doesn't have a problem collecting money. I mean, let's face it, every single president since the year 2000 has brought in more revenue, more tax revenue. So that includes Republicans, Democrats, everybody, right? The biggest problem with the government is they've had a spending problem. And Trump realized this. This is why he brought in the Doge and he attempted to cut a lot of the spending. But with this, he realized, okay, the GDP will shrink dramatically because a lot of it was just propped up by this fluff, essentially, right? Because all of this fluff essentially was equating to GDP because it was government spending. And now we're starting to see this really, I guess, take it down, right? So if we keep going through this exercise here, it accelerates, right? Net interest will grow by 76%, rising from $1 trillion in 2026 to $1.8 trillion in 2035. That's nearly a double in that decade. So in just 9 years, our interest payments are going to grow by 76%. Not the debt itself, that's just the interest payments. And that's more than we spend on Social Security increases, Medicare increases, everything. And there's a quote in this comparison data that says the federal government currently spends more on interest payments than it does on Medicare, national defense, Medicaid, veterans benefits and services, food and nutrition, service transportation, and science, space, and technology. So we're literally spending more on interest than almost everything else that the government does combined. And it's not just me saying these things. The world's largest bank, JP Morgan, is also saying these things, right? Because you might be thinking, all right, Brandon, this is theoretical. Surely the big banks aren't worried about this, right? Well, that's wrong, because this is from David Kelly Jr. He's JP Morgan's chief global strategist. He said, America is going broke, but no one is panicking yet because the government is going broke slowly. He says there is a danger that political choices lead to a faster deterioration in the federal finances, leading to a backup in long-term interest rates and a lower dollar. So JP Morgan, literally the biggest bank in the world, is telling their clients that we are going broke. And they're warning that political choices could make it happen faster instead of slow. And then this is what he tells his investors to do. He says many investors should likely consider diversifying their portfolios by adding alternative assets and international stocks. The risk that we are moving from a going broke slowly to going broke quickly adds an important reason to make this move today. This is the biggest bank in the world, right? They've got trillions of dollars under management. And JP Morgan, they're no slouch, right? They've essentially seen a lot of what these guys are doing here before, right? They've been around the block. They've been telling people, hey, they've got a lot of rich clients who have made their mark in the stock market, real estate, you name it. All of these people have fled to hard assets over a good period of time. And now they're saying, hey, this dollar, what we are seeing, it's spiraling out of control. Now, the escape of the system, we're going to get into that here in a minute, but if you've already got some Bitcoin, you don't need to sell it in order to help pay some bills, help move anything around, even travel, do something like that. You could borrow against it using salt lending. Look, people are saying, oh, Bitcoin's crashing, it's going down, it's at 60K, 70K, whatever even it's at. Honestly, if you don't think it's going to go too much lower, this might actually be a good time to borrow, because if you think about it, look, obviously not financial advice, but if you think about it, if Bitcoin goes up, that loan to value is going to go down. Thus, your interest rate that you will get will be better. And Salt Lending is already giving you guys an exclusive offer. If you go to saltlending.com/green-candle or the link down in the show notes below, they're giving an exclusive offer for Green Candle listeners because, hey, I told them we've got some of the best listeners in the game, some of the most dedicated audience. So you guys should really help them out. And they said, sure, we would love to do that. So they did that for you guys. All you got to do is go to the link down below in the show notes because, right? And yes, please be careful with leveraging, but Salt Lending does have a no liquidation solution here. So there is, a way that you could do that and be safe and be made whole, right? But let's keep it going, right? Because here's how we know how the math is broken. We know even JP Morgan's worried, but how do we know when a debt spiral starts? Because when is that going broke slowly going to become going broke quickly, right? Because there's three specific signs that I'm watching for here. The first is that interest rate sensitivity, right? This is where I essentially, talked about this a little bit earlier, but when small changes in that interest rates create massive changes in government cost, that's exactly where we are, right? This is the first worry because the Congress Budget Office projects 13.8 trillion in interest payments over the next decade. And that's assuming interest rates stay relatively low. I mean, this is a big reason why Trump is, essentially yelling at everybody to lower interest rates. It's not because he wants to, have this prospering economy with everything. I mean, of course he does, right? Let's take that back. But what he does want is the lower interest rates cost. And this is where he was essentially yelling at Jerome Powell, saying this is why he's causing, taking charges, criminal charges on Jerome Powell, because Powell keeping those interest rates high was an issue for the overall debt payments. And so that's what we've seen, is that Trump has been outwardly just telling them, hey, you are causing the overall United States American people trillions of dollars if you don't make this move, right? Because a 1%, not a 5% or not a 10%, 1% higher than they're projecting. And we're talking about $3.2 trillion in additional interest rate payments, right? That's not a big change to get $3.2 trillion. And they note a 1 percentage point error in the CBO's prediction interest rate or predicted interest rates is not historically unusual, given that this is about the average error in their interest rates projection, literally. So their average error is about 1%. And that 1% change could make a literally $3.2 trillion mistake, right? So we're seeing this play out in real time, and we're watching how the overall government is just potentially spiraling out of here, man. It's not looking good for the people all around the United States here, folks, because the government is routinely off on their own projections, right? So before we even account of what happens next, when investors start demanding that higher interest rates because they're worried about getting paid back, we're going to see by 2035 that rates will be just 1% higher and interest expense would be equal to 21% of the federal budget. It's 13% today. So let that sink in, folks. 1 out of every $5 the government spend would go towards interest payments, not roads, schools, defense, just interest on the money we've already spent. And the interesting thing is I brought up Jamie Dimon and JP Morgan already, but he wasn't the first or the only banker that's really come out against Trump and what he's doing. Of course, a lot of people hate on him, and he's a polarizing figure to say the very least, but the government starts using monetary policy to fund fiscal policy. This is where, I think the second big red flag is, because Bank of America is projecting that tax refunds in 2026 will be $65 billion higher than in 2025, literally an 18% increase in 1 year. And that sounds great for the American people, right? We're able to get a bunch of new money circulating and all of this, right? And that interest rate payment, the tax refunds, that's going to be injected liquidity back into the American people, right? But where does that money come from? It's not like the government suddenly has $65 billion more in revenue, right? No, they're going to print it, or more accurately, they're going to borrow it, and the Federal Reserve is going to be buying bonds. So who benefits in all of this, all right? It's going to be the middle and the income households, or in the higher income households, that will receive the biggest tax benefits, right? Because particularly changes to the state and local tax deduction caps, they'll suggest that the middle and high income households will receive the big benefits, and then we'll be borrowing money to give the tax cut to the people who, let's say, they probably don't need them because they have a lot in assets, right? These interest rates on borrowing will go up every single year, and the Federal Reserve has to keep buying government bonds to fund all this, right? This is essentially called fiscal dominance. Fiscal dominance is when the government needs to finance its spending, starts driving monetary policy instead of the other way around. The Fed stops fighting inflation and starts funding the deficit. And that's when currencies die. And that's what we're seeing right now, is that's exactly what is going on. And this is what the, Bank of America CEO said, right? But then taking it a step further here, right? The third sign, when political systems become incapable of making hard choices, and we just saw this in real time on the 31st of January, so like a week ago, the U.S. government shut down because Congress couldn't agree on basic funding. This is the second shutdown in recent months. The article mentions that The previous shutdowns lasted 43 days and cost the US economy an estimated $11 billion. That's billion with a B, folks. So we're going to start to see, these government shutdowns really start to, hurt in the long term. And what do I tell you guys all the time on this channel? For those of you who aren't subscribed, please make sure you do. But I tell you guys that the policies that we see get implemented today, they're 6 to 12 to maybe even 18 months out before you start seeing the true effects of that. We had the last government shutdown in October. So, of course, not everything crashed and burned, right? We didn't see that. But when we see the government start to shut down and these policies being made, right? It's not about immigration or any other policy that they're going to try to make you believe. It's about a political system that has become completely incapable of addressing the fundamental fiscal crisis that we're in. All right, so let's think about that. We have $38 trillion in debt, interest payments over $1 trillion a year, deficits that are getting bigger literally every single year. And instead of addressing any of that, Congress shuts down the government over immigration enforcement. I mean, come on, does this make sense? And this is what keeps happening. The debt ceiling fights, government shutdowns, continuing resolutions instead of actual budgets. They can't even pass normal funding bills anymore. And the latest bill that has literally been around for 100 years, that is now late, right? So that's where things are going to get crazy because we have all three signs are flashing red right now with interest rate sensitivity, fiscal dominance, political dysfunction. But the question is, what are the people who actually understand this doing with their money, right? Because we've seen people flooding out of Bitcoin. We've seen people flooding out of gold and silver. Like everything around is essentially crashing. And we've got Bitcoin down at under 69,000 here. So what's the smart money doing with this? How are they going through this, right? Even with this debt spiral, how are they going to be approaching this? How are the rich going to continue to enrich themselves? Because, let me show you with what they're doing, right? Because they're telling you on CNBC, everything is fine. They're quietly repositioning their entire portfolios for what's coming. This analysis that I'm showing you guys right here breaks down exactly what happens when traditional investments, when a debt spiral accelerates. The traditional portfolio models, such as the 60-40 blend of long duration bonds and passive equity exposure, these will crumble under the weight of rate volatility and earnings compression, right? So look at this. There's total non-financial US debt is now at 257% of GDP, surpassing the GFC peak of 234%. We now have more debt than we did in 2008 financial crisis, but this time the government can't bail everyone out because the government is the literal problem in this, right? When the bond market enters a panic mode and liquidity dries up, it will serve as the catalyst that bursts the real estate bubble, the business credit bubble, and the equity market bubble in tandem. So they're literally talking about not just one, not just two, but three bubbles popping at the same time because they're inflated by the same thing. Cheap money from an over-leveraged government. Now, if you want to escape the system, the best place to do that is by holding Bitcoin in self-custody. And I've got a special surprise for you guys. We've got Valentine's Day here coming up. So share this with your loved ones because between now and the 15th, we've got discounts. We got a Trezor Safe 7 with a bonus wireless charger for free, the Safe 5 for 10% off, and the Safe 3 for 10% off. So we could get up to 20% off on all devices via the link down below. And we're going to reduce the fear around switching. And we are going to get our Bitcoin off exchanges. Show your Bitcoin and your financial health a little love this season, folks. And go on down to the affiliate link down below and get yourself a Trezor and get it off an exchange. Because if you really do love yourself, you love your pocketbooks, you love how much time you're spending researching, doing all these things, the best thing you can do for yourself is honestly just get your Bitcoin off an exchange. I know it sounds a little crazy and daunting, but literally, I'm telling you guys, it's the easiest thing because you guys see the writing on the wall. The debt is spiraling out of control, spiraling, right? We've heard that nation states are buying. We've heard all these different things, right? But the smart money managers, they're diversifying out of dollar denominated assets. And they're not buying European stocks or emerging markets bonds. They're buying assets that can't be printed, assets that don't depend on government promises, assets that maintain their value while currency falls. Right? So this is where I think it's going to be, super, super interesting because now we're going to see how this is really playing out, right? Because we're seeing these things on CNBC, right? World Bank president sounding the alarm that we're buying 5.4% to buy government bonds. I mean, these aren't, me sounding the alarms, the doom and gloom guys saying everything, right? This is, former Fed presidents and all that, right? And we even had Jim Cramer this morning said that the US government bought Bitcoin at 60K. So there's a real possibility that, governments are around there buying Bitcoin and scooping up and potentially manufacturing this. The biggest issue with what we see here is that we see Bitcoin wallets and addresses with 0.1 Bitcoin. Unfortunately, when these dips happen, folks, look at this. You guys are selling off. These dips happen, and the amount of wallets with 0.1 Bitcoin are decreasing. When you get that first dip, people are trying to take profits like they know what the hell is going on in the Bitcoin market. It's lunacy, folks. What are we doing here? You guys should be hodling, and this should be your time to buy because let's just face it, every single time we get a dip like this, it's a blessing in disguise. If you guys actually believe in Bitcoin, you would be scooping it up as much as you possibly could, especially during a time like this. But the reality is I'm looking at the numbers here, and it's just showing that you guys are selling. I don't know if it's all you guys in the chat selling here, or it's the bears that are saying here in the chat that Bitcoin's going to zero. But now, when we see all this, right? This is the craziness that we've got in the chat. No, we aren't all going to die. Don't worry. We're going to be okay. Fiat is the thing that's going to be going to zero as long as we have Bitcoin, right? That's where I think, we're going to be the ones that make it, right? During every single cycle, this is what we see, folks. But there was a great podcast I heard today with Checkmatey on TFTC. And he was basically saying, look, 80% of the wallets are underwater at this point. So majority of us here in this chat, we're underwater, right? We bought some Bitcoin above that, 69K mark that we're at right now. And we've seen it crash. So this is where things are going to get interesting. But don't let BlackRock scoop up all your Bitcoin. Don't let the US government scoop up all your Bitcoin, because I just lined out to you guys. The only escape that the US government seemingly has is Bitcoin. And what are they going to do? They're going to do everything they can to confiscate it and essentially scoop up as much of it can. Let me know in the comments. Do you guys actually believe Jim Cramer? You guys believe that in the chat over here, that the US government actually bought Bitcoin? I mean, I don't know if they found that budget neutral way. I feel like Trump, if he did buy Bitcoin, he would like to announce it. But I mean, hey, at the end of the day, all we could do is just keep stacking. Stay humble, stack sats, folks. Make sure you guys are subscribed. Hit that like button and subscribe button, and I'll catch you guys all at the next one.